Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Trump does it again. Last weekend, President Trump announced another round of tariffs on several European countries as a way to pressure Denmark to make a deal to sell Greenland to the United States. Now, there was immediate outrage from foreign leaders and political opponents, and both the stock and bond market fell quite dramatically in trading this past Tuesday. That didn't last long, however. In a speech to the World Economic Forum in Davos, Switzerland on Wednesday morning, Trump took military force off the table as an option regarding Greenland, and by Wednesday afternoon, terms of a Greenland deal were actually taking place. So the stock market staged a dramatic rebound that continued throughout the rest of the trading week and pushed the market back to within a whisper of its prior all-time highs. In addition, the market continues to broaden out in the direction of smaller cap companies and cyclically oriented businesses. So all signs point to an economic acceleration in progress that will likely continue for the foreseeable future. For this week's featured insight, stay diversified. Investors that have maintained appropriate diversification are feeling pretty good about themselves after a strong 2025 and a great start to 2026. A lot of the investment classes that many investors either shunned or lacked sufficient exposure to in recent years have really started to shine. Think international equities, small caps, and cyclical value stocks. A lot of the former high-flying large tech companies have been significant underperformers recently. Stocks like Apple, Microsoft, and Meta come to mind. So remember to stay diversified even when it seems like it's not advantageous to do so. You never know when you're going to need that diversification and be handsomely rewarded for it. Looking ahead, Fed snoozer. Well, the Federal Reserve meets again next week, but there won't be too much to talk about when it comes to markets, unless, of course, there's some kind of surprise, always a possibility. But the reason it's likely to be a snoozer is that the Fed is highly unlikely to change its current interest rate target, and since Fed Chair Jerome Powell is essentially a lame duck at this point, it probably won't matter too much what he has to say. Everyone knows there will be a new Fed chair come May, and so the economic data and earnings will likely be far more impactful on the direction of the market in the coming months. On that front, next week will be another big week for earnings, which so far seem to be coming in just fine, and future earnings estimates are either holding up or even being moved slightly higher. Yet another reason the path of least resistance for this market continues to be upward. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.